Good day, everyone. So today I'm going to present our Corp Berhad Financial Analysis Review, and I'm the presenter. My name is Xing Xuan. So there are three agendas in the Financial Analysis Review, which is the introductions of company, financial analysis, last but not least, the recommendations and conclusions. First of all, I would like to introduce IOI Corporations, which commonly refers to as IOI, and it incorporated on October 31st, 1969. It is the leading global integrated palm oil producers and one of the largest property development and investment companies in Malaysia. They have three main business listed in the market stock exchange, which is IOI Corporation Berhad and IOI Property Group Berhad. So IOI employs more than 30,000 people from more than 25 countries. As for the benchmark companies, YTL Corporations Berhad is an investment holding company. It operates as an integrated infrastructures development, and they have 6 segments in the company, which operates in construction, hotel operations, cement and building materials, management services, and other real estate investment and development and utilities. So we will use 5 types of financial ratios to do the financial analysis to describe the relationships between different financial variables in the financial statements, which allows the investor to do decisions making or predictive purposes and able to assess the company profitability, liquidity, efficiency, as well as the returns from shareholders' investment. First of all, the profitability ratios measures how efficiently the companies turn business into a profit. So our gross profit is not delightful during these 2 years, and operating profit levels is quite moderate, which above the 10% of the company aims. And YTL have a net loss is the main impact that leads to the low operations margin in market, which YTL Power International's one of the segments posted a 143 million net loss in the financial year 2021. So as for the returns on equity, IOI have the highest, means that they have an investment fund to generate earning growth in a fashionable manner. And for the returns on assets, IOI corporate also have the highest, meaning that the company is better than using the assets to generate incomes compared to YTL. So secondly is the efficiency ratios. So the account receivable days that IOI indicates the higher efficiency in collecting debts from the customers, and their inventory turnover rate shows that the IOI convert the inventories into sales faster than YTL. So continuously is the liquidity ratios. So IOI needs 0.42 to pay off its current liabilities compared to 2020, but in 2021 IOI is weaker to maintain a relatively high cash balancing during the year, which figures in 0.12 times. And YTL is similar performance with the IOI with 0.14 times in 2021. So for the leverage ratios, IOI performance between the 2020 and 2021 are not much difference, which are 0.74 in 2020 and 0.71 in 2021. On the other hand, YTL is the highest ratios in the comparison, which means that it suggests more risks, while a particular low one may indicate that the business is not taking advantage of debt financing to explain. So both companies typically consider optimals or normals for well-established companies in a gearing ratios between 0.25 to 0.5. The last ratios will be the investment ratios. Above calculations shows that the IOI Corporations Berhad has the highest price to earning ratios, which rated 17%, which indicates that the investor expect a higher returns compared with YTL, which rated negative 21.55%, considered at loss. As for earning per shares, IOI Corporations Berhad is the highest value, especially in 2021, which figure is 22.353% compared to the year 2020, which only 9.57%. It means that the company is able to generate a significant dividend for the investors, and it can reinvest the funds back into its business to grow further. Last but not least, we are coming to the recommendations and conclusions. So IOI Corporate can elevate their brand and increase the perceived value of the business, and it is interesting to see that which sectors have some of the best margin in the company, or streamline company operations and reduce the operating expenses, such as cut overtime and accessing overstaffing. So as for investor perspective, company earning money is the main concern. To improve the return on assets, we take IOI properties as example. We can watch the companies can watch the excessive payroll expenses, rising material supplies that increase. For example, company can reduce the number of employees needed by improving the productivity and reduce the cost of material by renegotiating with the suppliers or finding the new suppliers. So, given IOI Corporations Berhad has a market capitalization of 23.5 billion ringgit Malaysia's, it is hard to believe that these liabilities pose much threat, but there are sufficient liabilities that will certainly recommend that the shareholders continue to monitor the balance sheets and going forward. So based on the analysis, of the financial ratios of Al Berhad and YTL corporations, Al has the highest ideal value than Al Berhad in terms of earning per shares, price earning ratios, inventory turnover, and returns on assets than YTL corporations. In terms of earning per shares, in terms of that, investors are recommended to choose Al Berhad to maximize their returns on investment and shareholders' wealth. So that's end of my presentations. Thank you.